देखो राजा, क्वेश्चन नंबर 16, लेट्स डू. Can they calculate depreciation on the following assets under old tax regime? WDV as on 1st April 23. In the latest book, it will be 24. You are given building A, building B, building C. Rate of depreciations 5, 10, and 10. Yes or no? 5, 10, and 10. Okay. Furniture is given 10%. Plant and machinery A 30%. Plant and machinery B 15%. First of all, we know for making blocks, nature should be same. Secondly, rate of depreciation should be same. So we divided it that way. Building 5%, then building 10%, furniture 10%, plant and machinery 30%, plant and machinery 15%. Yes or no? Clear? Yes or no? Following assets have been purchased and installed during the previous year 2024-25 on 10th November 2024, but plant C was acquired in April 2024. Okay, Raja. Plant C, D, E and building D and E were purchased. Yes or no? Now we need to draw a pattern. These are the purchases. Plant and machinery 40% will be a new block. Plant and machinery 30% will be a part of this. Plant and machinery 15% will be a part of this. Building 10% will be a part of this portion, and building 5% will be a part of this one. Yes or no? Everyone, yes or no? Clear? Very important to map the assets according to their block. A really important point for these questions. Next, following assets have been sold during the previous year. So we are selling building B. So we have applied dot on the assets which we are selling. Building B we are selling and plant A we are selling. So we have put dots. Okay. Next one. 75,000 rupees were also spent to renovate and modify building A. Means these were on cost on building A. Okay. So we have put the arrow. Then rupees 1 lakh has also been spent in May 2024 on machinery B. We have applied arrow there also to make it suitable for the new system of production. So, any doubt in the question first? Any doubt in the marking or tracing? Then we'll continue about the solving. Just read Raja quick. So now, building block 5%. First of all, we'll solve building block 5%. Tell me the WDV of building block 5%, everyone. It's 4,25,000. Then any addition in that? Yes, sir. 75,000 was the addition in that. Secondly, this building E was also addition in that. So 1 lakh and 75,000. Two additions are there. 1st April 24 WDV 4,25,000. Two additions are there. Building E and building A. Tell me, out of building E or A, is there any star? Star means which is purchased and used in this year and used for less than 180 days. Tell me, Raja. Building E was purchased when? All the assets except plant C. Plant C was acquired in April 24, but all other assets have been purchased on 10th November 24. 10th November 24 is less than 180 days, everyone. Yes or no? Quick. I need replies from everyone. Yes, those are less than 180 days. If that's less than 180 days, means building E will also be less than 180 days. So there will be a star in building A. Okay, building E. And building A was just renovated. So modify, and its date is not given. So that will not be taken as a star. Okay. Then no sale consideration is there. WDV as on 31st March 25, we have got depreciation to be applied. Everyone be careful. We normally need to apply depreciation on 6 lakh, but out of 6 lakh, 1 lakh is to be depreciated for a half year. Okay. So 1 lakh will be depreciated 5% for half year and 5 lakh full 5% full year. Total depreciation is 27,500 and WDV as on 1st April 2025 comes out to be 5,72,500. So with this building block 5% has been done. Okay Raja. Okay, you can cancel out what all is finished. You can once cancel out. This is also done. Next, we are having building block 10%, which contains two buildings B and C, and out of that B is to be sold in this year. Okay, so we will add the WDVs. Building block 10%, we'll add both B and C. As on 1st April 2024, it comes out to 7,75,000. Okay, any addition? Building 10%, Raja, any addition? Building 10% addition is there, 4 lakh. 4 lakh, 4 lakh, 4 lakh. Okay, so it's also a star. That's building D. Then out of that, we are selling building B for rupees 5,25,000. Okay. So out of that 5,25,000, building B is sold, and the remaining WDV is 31st March as on 31st March 25, 6,50,000. Now again, you need to depreciate 6,50,000 with 10%, yes or no? But out of 6,50,000, 4 lakh is to be depreciated with half amount, or we can say half year. So 4 lakh into 10% into 1 by 2, and remaining 2,50,000 with full 10% for the whole year. And closing the next year opening WDV will be as on 1st April 2025, that is 6 lakh 5,000. Anyone, any doubt, Raja? Anyone, any doubt? Two blocks have been finished. Okay, Raja. Next one. So we can cancel out building B, building C, and building D also. This has been done. This building B sale also cancelled out. Remaining ones. Now furniture block 10%, WDV opening is 20,810. No purchases there, no sale is there. Simply you will take the closing WDV and you can calculate the depreciation. Simply you can calculate this, yes or no? Full 10% depreciation and next opening WDV. Anyone, any doubt, Raja? Okay, Raja. Next one. Now, plant and machinery block 30%. Plant and machinery block 30%. WDV as on 1st April 24, 5,30,000. Any arrow? Yes, sir. This is the arrow. Plant D is purchased for 2,40,000 and plant A was sold. Yes, there is a dot also. 2,70,000. Okay. Now, plant and machinery block 15%. Opening WDV as on 1st April 24. Plant B 2,10,000. Additions, plant E. No, we have to do 30% first. Okay, this we are doing. 1st April 24, 5,30,000 Add additions. Plant D for rupees 2,40,000 with a star. Then sale consideration is plant A for 2,70,000 and closing WDV as on 31st March 2025 comes out to 5 lakh, and depreciation out of 5 lakh we have to apply half depreciation on 2,40,000. Okay, so 240 30% 1 by 2 and remaining 2,60,000 with full 30%. But this is a plant and machinery. This will be used for production purpose. This is a new plant and machinery. So we will also calculate additional depreciation in the old tax regime. Additional depreciation is 20%, and but again the asset is with a star. Again the asset is with star, and the balance so the is with a star. So the depreciation, additional depreciation will also be with 1 by 2. So balance remains as on 1st April 25, that is 3,62,000. Any doubt, bacha? Any doubt? This was your plant and machinery block 30%. ठीक है ना? Now Raja, next. This is finished. This is finished. This is finished. This is finished. Finished. Now, plant and machinery 15% block. Opening WDV is 2,10,000. 15% purchase is also there, 3,40,000. Names we will write side by side. Plant and machinery B was already there, and E was purchased, new one. And plant A was sold, that we have done. This should be cancelled out. Okay. And now we are having plant and machinery B. And the question is saying 1 lakh has also been spent in May 2024 on machinery B to make it suitable for the new system of production. Means this is also part addition. So plant and machinery block 15%. Opening WDV is plant B 2,10,000. In additions, plant E was purchased with a star 3,40,000, and plant B was made addition. This plant was made addition to suit the new system of production. So total asset is now 6,50,000. Sale consideration is not there. WDV as on 31st March 25, 25. Then depreciation now. 6,50,000 was total. Out of that, 3,40,000 contains the star. So first of all, 3,40,000, 15% 1 by 2, and remaining is 3,10,000 with full 15%. So total depreciation is 72,000 for this normal depreciation. After that, this is a plant and machinery. New plant and machinery is purchased. New one is this one for 3,40,000. This will be used for production normally. So it will also attract additional depreciation in the old tax regime, 20%. But again, the asset was with a star. So that depreciation will be for half year, 34,000, and the balance WDV becomes 5,44,000. Again, any doubt, Raja? Then we'll wind up with one more block. It's over almost. Next, Raja, tell me what's remaining. All the previous WDVs have been shut down. Now only one more addition is there, that is plant 40%. So this block will be plant and machinery block 40%, but no WDV will be there. You will write nil. Add additions, plant C with cost 1,08,000. So small. Then 1,08,000, no sale consideration. Depreciation normal will be for the full year. And now, was there a star? We need to check. Plant C, plant C, plant C. Yes, plant C was purchased in April 2024. So it doesn't have a star. Beware. All other assets were with a star, but this doesn't have a star, so it will be depreciated for the full year. Again, this is a plant and machinery, so it will also get 20% additional depreciation also for full year. And the balance becomes 43,200 as on 1st April 2025. The question is finished. Now you can do that, you can add all the values of depreciations, normal depreciation, additional depreciation, everything from all the blocks. And then you will get the total depreciation under section 32. Okay, Raja? Tell me any doubt, any doubt, any doubt, any doubt, Raja? Okay, so we'll move to the next question now. Yesterday we did an example that how can a block be closed. There was two cases. A block can be closed when you sell any item, any single item or all the assets of that block at a value more than its total value, at a value which is more than the total value of the block. Yes or no? For example, the value of block was 5 lakh. If you sell single asset or if you sell all the assets, whatever be the case, but for a value greater than the total value of that block, like you sold for 5,50,000 when the total value of block was rupees 5 lakh, means you sold at a higher price. Yes or no? You are in a profit. Bolo Raja, you are at a profit. So the block will be closed and you will get short-term capital gain of rupees 50,000. Yes or no? This was the first example which we did 2-3 days. Means previous 2-3 classes we have discussed the same example. The point concept is done. Then yesterday we did a second example also, second case also, that the block can also be closed when you sell an asset which is the only asset in that block. Only that asset was present in that block. Only plant C was there and that plant C has been sold. Does there exist any asset in the block now? Say yes or no. Is there any remaining asset in that block then? Yes or no? Very good, Janvi. Very good, Sanya, Ritika. Okay. So there's no asset left in that block. Then also the block will be closed even if the sale consideration was less than the total value of the block, because the remaining value can't be considered as a WDV because there is no asset to present physically for that block. So the remaining value becomes STCL, short term capital loss. Yes or no? Clear? But how can we save this STCL? If we want to continue it like a WDV, we want to continue it like a block and get depreciation on that. So there's a tax planning concept in this also. There's a loophole with tax planning. There's an tax planning is said to have use the, it's based on using the rules of income tax only to save your tax or your any benefit for any benefit. Okay. So you can have an addition even for rupees 500 addition, the block will continue. Yes or no? We discussed this example yesterday. Even if you purchase an additional asset, even for 500 rupees, the block will continue. The block will continue. The remaining WDV will continue. Depreciation will be charged and charged to P&L, and net profit of the business will come down, and the person or the business will save the income tax, and there will be no consideration in the capital gain head of this STCL. Okay, so there was a way that let's purchase an additional plant B for rupees 1000, then the balance will be 31,000. That will be considered like a closing WDV as on 31st March 2025. Clear, Raja? Okay, Raja. This was the way. Now let's read question number 8. Good Luck Limited purchased, very important question, Raja. Good Luck Limited purchased a plant for rupees 40 lakh from Raj Udyog Limited and received rupees 5 lakh by way of subsidy. 40 lakh was the cost, and you received 5 lakh by way of subsidy from the government for the purchase of the plant in June 2022 during the financial year 22-23. In your book, it will be 23-24. Yes or no? Confirm, everyone. Yes. So, June 2023 during the financial year 22-23, 23-24. Okay. In January 2025, the plant was completely destroyed by fire. Claim of rupees 4 lakh was settled by the insurance company, and the scrap was sold by the company for 70,000 rupees. Assuming that the plant is depreciable at 15%, compute depreciation under old tax regime for the previous year 2023-24 and 2024-25 in the following cases. If the plant is replaced and if the plant is not replaced. Okay. Do you get the question? Do you get the basics of the question first? Yes or no? Read it carefully once again. It's very important question, Raja. So, देखो Raja. The previous year was, we have to make account for 2 years, है ना? The first year was 2023-24 and second year was 24-25. So listen up very carefully. First we have to make for previous year 23-24, assessment year 24-25, plant and machinery block 15%. Okay. So सुनो ध्यान से. This plant was purchased in the first previous year for 40 lakh and we got a subsidy of 5 lakh. Okay, there was no plant in that block earlier. Okay, so the opening WDV was nil in the last year. Additions were with 35 lakhs, excluding the subsidy. Okay, so now we got 35 lakh. There was no sale consideration in the previous year. Depreciation will charge normal. Normal means normal depreciation is 15% on 35 lakhs, and then there is no star, so additional depreciation of 20% will be applied on 35 lakhs. Any doubt in WDV as on 1st April 2024, 22 lakh 75,000. Everyone, any doubt till this? It's very important. Okay. Now we'll continue this. When we'll continue this, the previous year will be 2024-25 and assessment year will be 2025-26. But the question gave us two options. The two options differ for the second year only. First year goes same. Now the second year, first of all, we'll think of the B part. If the plant is not replaced. So what happened in the B part? Your opening WDV continued from the previous year, 22,75,000. There was no additions, no replacement, and there was no sale consideration. But when the asset was destroyed, we got insurance claim. It's similar like sale. While when the sale of asset is done, asset goes out and money comes in. Same way, when asset gets destroyed, asset goes out and insurance claim comes in. So we'll treat the same. That's instead of sale consideration, we will write insurance claim received. How much insurance claim? 4 lakh, and scrap was sold for 70,000 by us, by the company. Means we sold and matlab we got the money 4 lakh 70,000 total. Insurance claim and scrap. So we got STCL, short term capital loss of 18 lakh 5,000 because there is no remaining asset in this block. अब बच्चे को माइंड में आता है कि इसमें एसेट क्यों नहीं है, कैसे नहीं है, हमें कैसे पता? राजा, we ourselves started this block in the last year. There's only a single machine and that is also destroyed. So block doesn't consist of any machine now. So there is a short-term capital loss. And now question says if we replace that for rupees 45 lakh, then वही concept जो हमने अभी पढ़ा, 45 lakh की additions आ गई and the block will continue. Now you'll depreciate 63 lakh 5,000 but out of that 45 lakh was purchased on February 2024, means there will be a star and the depreciation normal and additional will be half. Clear, Raja? This is the concept.